Well, the biggest negative factor is the property market. They've eased mortgage rates, mortgage lending rates, and guidelines on how much people have to put up. They've allowed secondary purchases to be more easily done in China. They've stabilized resale market a little bit, but it's still a bit too early to tell. Another key problem is the local governments. They're still under financial pressures. Infrastructure spending has peaked a lot. Consumption continues to be tepid. That won't change a lot. It really depends upon whether or not people have confidence in the future. And that is still a big uncertainty. And that uncertainty reflects in part the U.S.-China trade tensions and technology tensions. So this is casting a pall over, I would call, the general environment in China.
Yukon, Dan here in Abu Dhabi. Analysts say that risks to growth are skewed to the downside because of the concerns in the property sector that you've been talking about. So if that is the case, what does year-end growth in China look like in your view?
Well, they started off this year with a target of 5%, and people expected a major rebound in consumption. So many analysts increased their predictions for this year to over 6%. They've had to scale that back. My own sense is that the growth rate for this year might be in the range of 5%. It might even be a little bit lower. I think the major issue is the consumption is not as strong as people would have expected. Savings rates are continuing to be relatively high. Bank deposits are piling up. Consumers are actually not quite ready to spend. But if you have to put this in a broad perspective, consumption growth rates in China are still way higher than they are in the West. Consumption is increasing by something like 45% on average. And if you look at what's going on in the U.S. and Europe, it's probably 2%. But the major factor is you need consumption growth of 7 to 8% in China, really, to meet the growth target of 5%. And that isn't happening.
And Yukon, before I let you go, I wanted to ask you about a very specific component of the import measure here, and it's critical for the region that I'm in here in the Middle East. Crude oil imports in China are surging more than 30% on year in August, and it's interesting to see this resiliency and demand when it comes to oil imports in China. I have a question, though, regarding whether or not you think that resilience is here to stay and whether or not we're going to see import demand, particularly when it comes to crude oil, staying intact at these levels. Do you have a view on this?
Well, China's been more resilient, relatively less bothered by the general market surge in crude oil prices because of its links with Russia. It's been getting concessional rates. It's been building up stockpiles, and I would expect it will continue to do so. So unlike what's happening in the West, where oil prices are increasing very rapidly, China still has preferential terms and is drawing on the Russian oil, and that's a very important factor.